Good morning. This is the 5 Minute Morning Miner VSA's podcast, Friday, the 17th of October, and I am with Paul Rankin. Paul, how are you? It's David Scriven.
I'm very good. Thank you. Very good.
Excellent. So, our previous colleagues, Andrew and Ollie have been talking about mine financings and the strength of precious metals. Those trends continues. But let's focus on the news straight away and dive into Guanajuato Silver and the drilling results from El Cubo.
Yes, this is the operating mine El Cubo down in the Guanajuato district of Mexico. They just a couple of drill holes reported in this press release, but they have some importance as far as where they will be sourcing future ore for the El Cubo mill. Specifically, they had a discovery here on the near the San Luis vein. It's a pretty narrow intercept, but awfully high grade. It's over 2 kilograms of silver and 13 grams gold and 970 grams silver. So over 2 kilos gold or silver equivalent. Just shy of 2 tenths of a meter in width. But given those kinds of grades like that, they would simply go in and take all the wall rock as well and accept the dilution into the mill because it would still make good money. This area around the San Luis vein has already produced about 9,800 tons of ore into the mill so far this year. So this newer discovery would suggest that there's going to be more to come from that particular portion. The other drill hole they talked about was on the Pacman vein in the Pando area of the property. And this was a 26-gram gold and 321 gram silver intercept over 0.4 meters, and that's equivalent to 2,600 grams per ton silver equivalent. And this Pacman vein drilling also came across two new additional veins as well that had been encountered in the footwall as they drilled further through in order to intercept these veins. So it's a good sign that there's going to be yet more ore to come out of this Pacman vein system as well in the Villalpando area.
Very encouraging. And as people will be aware, G Silver recently did an oversubscribed bought deal. And in that vein, Petra Diamonds, London quoted, has launched a fully underwritten 10 for 17 rights issue to raise 18 million. Your thoughts on that, Paul?
Yes, that's right. And they also made a separate release too about their audited full year 2025 results. And those aren't looking that great at all. And hence the need for this restructuring of debts and working cash flows and so forth. The fully underwritten 10 for 17 rights issue, it's intended to raise just shy of 19 million pounds sterling or $25 million US. Priced at 16.5 pence per ordinary share. It is intended to extend the maturities as well on senior secured bank debt by a full near 4 years, where on notes that were due in January of this coming year out to the end of 2029. So to give them more runway time on the debt portion of the company, because that in the full year results it has risen here as well to a number over $261 million in net debt now. Meanwhile, in that full year result, their value per carat also fell by about 20% to $87 per carat for across the company here. And that leaves them with just an EBITDA margin of 13%, where it was 23% in the prior year. So, not looking good in the diamond sector overall, not looking good for the company, and therefore doing what they can in order to try to get some runway time here in operating working cash flows for the market to recover for them.
Indeed, tough times for Petra. Moving on, and still in the theme of raises, STLLR Gold. Your thoughts on that?
Yes, this Stellar Gold raise came in at Canadian $36.6 million. Key points there. Stellar has a really sizable deposit in the Tower Gold deposit project in Ontario. A long strike length on a series of historic mine properties there, all into the one project called Tower Gold, now containing drilled 11 million ounces in indicated and inferred resources, and those resources average overall as open pit and underground resources right about 1 gram per ton. So very big, but very low grade. They also have encouraging situation here that they have control of the old Hollinger mine gold tailings as well, and that's a low cost operation or opportunity for them to get some a profitable working cash flow at a much lower capital cost, because to put Tower Gold into production will cost in construction would be more than $1 billion there. So if they can get significant cash flows going, that would certainly help their profile in front of the bankers in order to be able to have to show they are an actually producing company. They also hold the Kolomak 4 million ounces in deposits up in the Northwest Territory, a few hours northwest of Yellowknife up there, but that's probably not included in the share price. Eric Sprott, in this financing round, raised his participation in the company to 15%, and Agnico Eagle, which had a position already of just over 10%, raised it to 11%. So there are some major players in here willing to back Stellar.
Very interesting. Perhaps, unless you have any thoughts on further names to bring to our attention, we'll wrap it up there. Any other names?
That's all for me today.
Thank you very much, Paul. We wish our listeners a very good weekend.
So long.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.